Hello guys, how to make money from trends. This is what I do, and this is my expertise, and this is what I teach in general. Okay, so trends is everything in the market. When there is no big trends, the market is very volatile, and you will find small trends. So I will just right now try to explain to you how things work, okay? And at least you will have an idea about this kind of trends. So let's go and explain a little bit. So for the trends, let's say I give you two examples of trends. Let's say a stock here was $85, and another stock here was $25. And this here, this is the same day, okay? The same day. Let's say it is May 15th, 2017. It means last year. So we have two stocks. Now the first one is going up, okay, here. And the second one is going down like this, okay? And this is now, today, this is stock from 25, it goes, let's say, to $100. Just an example, okay? It could be less, could be more. And this, a stock which was 85, now it is $45. Okay? So the trend is something that it is continuous. It doesn't mean that you will see green candlesticks, for example, for here, when you begin here, it doesn't mean that you will see always a green candlestick like this and it's going up. This is a stupid thing that you should never believe in it, because each trend should have some days good, and you should have some days that are bad. Okay, this, when you have something bad, this is called a correction. Correction is just where people, they sell because they are scared. They are scared to stay. Okay? Sometimes also when the stock is going down, this is what we call a downtrend. When it is going down, now if it is going up, it's called uptrend. Okay? Also, when the stock is going down, it doesn't mean that you should see always, you should see red candlesticks like this. But sometimes you will see green candlesticks and the stock is going up. Okay? So this is just how the trend is going to go from $25 to go to 100. It doesn't go like in a straight line like this. Okay? It should be going into up and down, up and down, up and down, but the price is always going up. Now for downtrend is the same thing. It's going down, but it doesn't mean that it is a lot. It's always going down, but it should be always going down. So there is green candlestick. So we have always green candlestick and red candlestick for both. Now, a downtrend, sometimes we have what we call a gap down. You find a lot of gap down here. Most of the time, not all of the time. Sometimes you find, for example, here, let's say here, you have a gap down. Gap down, it means that the stock has jumped down. Okay, here, let's say here it was 65. It goes here to 50. Okay, so you will have what we call here, this one is called a gap down. Now, when the stock is going up, most of the time, we have what we call a gap up. So let's say here, stock is just going up, and then we have a gap up. Let's see here, just an example. So the stock is going, it's going like this. Here, let's say it is 28, and then it goes to 39. So this is here a gap up. So most of the time, you find more gap ups in a trend, uptrend, and you find some gap downs into what we call a downtrend. Okay, this is just an example of how the trend, when it is trending up or when it is going down. Now, so this is just the first idea. This is just the first idea, and I know most of you who have been following me for many years, you get a clear idea how this works. Now I will add more information. For example, who makes these trends? Why these trends are formed into the market? Why some stocks, you see them, most of the time they don't trend at all. And some stocks, they trend and they do good in 1 year or 2 years, and then they stop going up. So this, what we will see after showing you some trends that are very, very long. You don't, and sometimes when something is going good, a lot of people, they are unaware of these things happening. It is happening each day. But since the people, they are confused because of the news and they watch too much TV, they will never see these things. Because in the news, when a stock has done 100%, let's say it was $50, and after 1 year it goes to $100, it has done 100%, and then the media comes to tell us, oh, that stock last year has done 100%. Now, what do I do with this news? It's over. It means it doesn't help me trade. It doesn't help me make money. So all the media, they give you the past. Okay? And if they give me the past, it's over. Okay? Because when you buy right now, you buy at the end of the trend. Because whenever they say you something, there is something behind. You should understand it. I have explained this many times. But a lot of people, you know, they still continue to watch news and this has happened, this has happened, this has happened. Okay, so if you continue the whole life, continue following this kind of news, you will never make the money because they don't give you the information that you need. Now, let's go and to see who is forming these trends. Okay, just an example. Now let's, in order to do an example. I will show you who are these participants. So we take the same example, okay, $25, okay, it goes, okay, here to $100, okay. Now the first participant are investors. Now when we say investors, it is anyone with who has money, anyone from the public or institutions or whatever. So because the investors, let's say an investor buys here at 28, just an example. Now when he buys, this is a buy, when he buys, he will not sell next day or next week or next month. He will stay 1 year or 2 or 3 to see where his investment is going. Okay? Now, 2, we have mutual funds. When we say mutual funds, are there the managers of big mutual fund? They will begin to buy from the beginning because they form, because this is the most important one to form, okay, to form the trend. Because why? Because they have too much money. Too much money. That's why when they buy, they continue to buy, and you see the trend is going up. So the mutual funds, and we say the investors, they can buy at any time. But mutual funds, they buy from the beginning and they push, because mutual fund, they like to see a trend because it is in his own interest for the mutual funds managers, okay? Because when they buy, he needs some people to push the price up and up, because it's not just the mutual fund who do the trend. The mutual fund needs investors, and investors, either by the media or by for example some special institutions, they ask their investors to buy this stock or to buy this ETF or to buy whatever. Okay, now third, that are very, very important, is swing traders. Swing traders like us, for example. Now swing traders, we follow, okay, we try to follow the trend whenever we discover it, and it is end. Now when the trend is going down again, we exit, we don't stay. But investors, mutual funds, these two, 1 and 2, okay, and 1, these two guys, they stay here, they hold for more, okay. Sometimes they mutual funds sell also after 1 year, 1 year and a half, or 2 years, but most of the time they stay. Now there is another people also, hedge funds managers. They always buy when they see an opportunity, okay. So hedge funds doesn't do just going short, but they can go long. Now 5 is the public. Public, it means anyone who buys the stock, whether for 5 days or 10 days or 1 year or 2, or just buy today and sell is the public. Now there are what we call number 6. I put it alone because we should see it. It's different. Okay, so we have said 1, investors with big money, mutual funds, swing traders, hedge funds. The public, it means the people. They just invest, but they don't know what they are doing. They see something good, or someone's website asks them to buy or whatever. So they have no. It means in general they have no real knowledge about investing. So this real knowledge. Okay, these are the public. Now swing traders, we don't use the knowledge for company, but we use technical analysis. It means how the price move. Technical analysis. We don't use the company information. Analysis. Okay? Now, number 6. These are the day traders. Why I put day traders? I put the day traders alone. Because this, since they buy and they sell in the same day, it means the same shares they buy, it means they make the stock go good in the day, they sell it, so they don't help that much to form the trend. Although it means they participate, but they are neutral. Just to understand this idea of neutrality in the forum presentation, in the forum continuation, in the forum formation, or the trend formation, they are neutral. Because let's say someone buys 1,000 shares. Someone is always commenting on 100 shares. Okay, he always comments like this. He say, "Oh, why you are always speaking about 100 shares with ch like I am speaking about." Like I'm speaking about shares and tables and okay, so there are some people, sorry for shares, there are some people who are like they don't want to really they don't come to the channel in order to learn something. Okay, they come because they lose money. They come to rent here and there in channels because they lose money instead of try to learn something new. So as I said, okay, 1,000 shares, this is at the beginning of the day, but when he buys or she buys 1,000 shares, he or she will sell it. So this 1,000 shares, it doesn't stay in the, it doesn't stay. I will show you right now how this, okay, if you find, for example, okay, a candlestick like this. Now this is the open, this is the close. So day traders, they buy from the beginning because at 9:30 or 10 o'clock they see an opportunity, the stock is strong, they buy, they go long. But when you see a tail like this, or even there is no tail, there are some people here at the end of the day or in the middle, they sell this 1,000 shares, and that's why we have the tail. Okay, even sometimes when it is so big, it means there are a lot of day trading playing here. Okay, and you see these stocks when they have high volume. Most of these stocks when they have high volume. Okay, so this is what I showed you is just those are the participants of the trend. Investors, mutual funds, swing traders, hedge funds, public, and day traders. And we say that day traders are neutral. It means they trade, but they don't do that much to the trend. Okay, so right now we have seen the participant, and there are a lot, and when they enter, understand that some who knows how to enter, they enter at first. Mostly of the beginners, most of the investors who have who just got knowledge, most of the time they don't care where they buy because they think of many years. Okay, they think of many years. So a trend can be 6 months, can be 1 year, can be 1 year and a half. Depends on how strong is the trend. Okay, so in the formation of these trends, day traders, they don't do that much. But in the opposite side, where the trend is going down, they have an impact on the stock itself, because they make the price value go down. So I will show you. So let's say we give the same example. Okay, so let's say the stock was $85 and it's going down. Okay, so what are these participants? Now it's $45. What are these participants that they do this? Now, almost all are the same. As we have seen up, we have seen down. But I would emphasize two. One is mutual fund, which have very impact. Second, hedge fund. Okay, and three, big traders. Okay, so what is the relation of mutual fund managers to this downtrend? What do they do? It means here they begin to sell, what we call sell off heavily. It means they want to get rid of this stock because they want to buy other stocks. So what they do, they sell off heavily. It means they sell a lot. That's why the stock, when it's going down, it goes so quick. But when the let's say we put day traders here. Okay, now a sell off, it means that this mutual fund, they are selling off. They cannot sell short. So there is no selling short because the mutual fund, they don't do sell short. If they do sell short, there would be no market. There would be no stock market because they have all the shares. Most of the shares in the market, they are theirs. Now, what the hedge funds do when they see an opportunity in a stock, okay, they sell short for a long position. Understand that this is a very dangerous position, but it is long position. It means they can stay 1 year, 2 years, 3 years with the same stock shorting it. Okay? Now we have big traders also. They sell short. Okay? And we have day traders. They sell short daily. All this, okay, they sell short just daily, not the whole year or the whole month. So these actions make the stock go down very, very quick, and see this from 2, 3, 4, all they are doing selling short. The only one who does a sell off or who sells who sells the real shares are mutual funds managers. Okay, so this is just to show you who are these participants in the market. Now let's go and check the Dow Jones. I will give you in general where is this trend that we are speaking about, and I give you examples of a trend up and trend down. Okay, so let's go to the chart. Now as you look here, this is the Dow Jones. Okay, now do you see this long trend? You see here all this from I will try to make sure you understand. So here, let's say from here until here, this is all this that I put between vertical lines. These are the time or the length of the trend in terms of time. And this year, from this day here, which is I think 2nd of February, this here, when the trend stops, there is no more trends, but there are, let's say here, there are small trends, but this is very volatile. You can't really make money from this thing. You can make little money, but not big money. What I am speaking about here is the big trend. Now, if you take this example, this day, 26 June 2016, it means it's nearly 2 years. And you see that the Dow Jones has been going so good. Okay? And you see here trouble. After the 2nd February to now, okay, you see the trouble of trending into orange, and there is no trend at all. Okay, stocks going up and down, up and down, up and down, up and down. So there is no real thing. Now, if you want to see in stocks, in these 30 stocks, we can begin with this one. Now, this is Boeing Corporation, an aerospace defense sector. In the industry, aerospace defense products and services. You see how excellent this company is going up. This is a gap up here. Okay, a very good gap up here. If you can see it, I want to make it big. Yes, here. From 212 to 225. Okay, so now if I ask you, did you discover Boeing? Okay, it's not only Boeing. If you see, for example, Goldman Sachs, the trend was very, very short. From here to here, just this. So all this is just a trouble because it doesn't do that good. Now, a better thing is UNH is better. You see the trend, excellent trend. We have another MMA trend, very good trend. Volatile, but it's very good. We have a gap down, gap up. Home Depot also, okay. Apple, McDonald's, Cat. Now, here we have just a small trend, and this IBM, okay, you see a very good trend here, which is very, very volatile, and a trend down, which is very, very volatile also. Visa, okay, as you can see, an excellent trend, not good, not that good. Let me find you others like JP Morgan Chase, this company, this bank. the Walt Disney have a short trend, and then it goes volatile. See, when the stock goes volatile, it will be very, very troubling. American Express, excellent. Microsoft, excellent. As you can see, the stock was 50, it goes to 95. Walmart has just let's say just a small, I'd say it's a good trend, nearly around 72, it goes to 109. It's a very good one, but it's not that long. Now, if you find Exxon, because you know the energy, they have some problems. Not all the companies, but some companies, they have problems. So their stock is not doing that good. Procter & Gamble also. Nike, we have just a small trend here. Dow DuPont is good, not good. Intel Corp, we have a very good trend, but it is small. And then we have a troubling thing. Verizon, not good. Cisco, it was a small trend. Coca-Cola, not doing that much. It's bad. PFE, not good. And GE. Now, GE, this is when I speak about the downtrend. This is the only one that was a real failure from the Dow Jones. Okay? The real failure, because it lost a lot. It lost nearly half of its price. Now, this is just to show you that although when you see the index is so good, but it doesn't show you what are the good stocks, what are the bad stocks. Now, if you see the beginning of the trend, how do you know that this trend will be good or no? It is just to bet on it. Okay? To bet on it and to see the past history of this stock. It's like a stock. It's like a person. You find someone who has excellent history of his behavior. He has never been to a prison. He has never caught by police. He's working. He has a nice job. He has no trouble with people. So he has a good character, and this is an uptrend. Trend. Okay, it's good, but you see some people who have a lot of troubles, and their life is like a downtrend. Okay, it means they do a lot of criminal things and then you see their life is going down and down and down, from the worst to the worst to the worst to the worst. And there are some people who are doing good thing and bad thing, and that's why you see it's trouble. This is just an example. So, in general, trends, you will never know how they will be formed. It means what is the thing that you can see? Is it a straightforward uptrend, or just having some trouble? You will never know until you bet on it. That's why people, each year, you find a stock, it's good, it begins strong, you just leave it. Okay? Because you will never know where it goes. But there are ways to know when it stops going up. Okay? And when it stops going up, it can go down, and it can go down for long. Okay, and if you don't exit on the right time, you will lose all this profit that you made. For example, in the 2nd February, just before the 2nd February, I think in the 31st of January, I have made a live session and I say the market will have a crash or correction, even though it's before the market has a correction. It's just because I see that in the media they begin to talk about this year will be good, and they talk too much. That's why in January the stock market has been doing so good, and I showed that. And for me it wasn't normal. How do you know about the future? How do you tell people that next year will be good? How do you know? Okay? It's just, but to tell people that it's a good year, there are other people are selling major mutual funds, or they are selling and you are buying. And then when they sell every shares, the market will be going down into a correction. And as you can see what happened. So we are now trending into a range. In the future, there might be some good trends. There might be also some bad trends. So it depends on the market. So the market, it doesn't mean that all the stocks will go up, all the stocks go down. So it depends. But in a bull market, most of the stocks are going up. Whatever their form, it means, of the trend, they are going up. If there is, for example, a correction or crash or something, you will see that most of the stocks are going down, but not all the stocks are going down, because there are some that are going up, because there are some people they buy. So you can't control the people what they do. That's why when you see when the trend has finished, let's say it is 2 years, like when you see Dow Jones, and you see the trend is excellent, and you ask someone, why do you sell? There is no reason. Okay? Because when you are very scared of the market, you can't make that much money that you want to. Okay? So thank you very much. Please, if you have other ideas about trends or you have other information, please share with us. And I hope you enjoyed the video. Thank you very much, and see you tomorrow if God wills.